Hello everyone, a very good morning, good afternoon, and good evening to all. Myself, Vaibhav, in today's session of Visual JForex, we will continue our algorithm development work using the indicator, acceleration, deceleration oscillator, and the TVS time segmented volume. So this session is going to be dedicated to a formation which will involve these two indicators in such a way that we will have the higher probability of ending the trade in a profitable manner. So let us now head to the Visual JForex board which has been developed by the Dukascopy Bank SA. In the last session, I had explained to you how to get the instrument subscription done where the Euro USD was used as the instrument of choice. If you feel like you can change the instrument, you can take another instrument and it will work just fine. So whichever instrument you want to work with, you can take that as the default instrument, and all you have to do is match it with the candle instrument and then hard code that same instrument in this second input parameter. Afterward, the position amount was defined at 0. I had also added these three acceleration, deceleration, oscillator blocks with the hourly candle period with the look back period of 1, 2, 3 respectively. And to consider the volume data to define the trend, we have these two time segmented volume indicator blocks with the hourly candle period and the look back period of 1 and 2 respectively. To look at the price volatility, we are also taking the help of these info candles or get historical candle. Now I will give you a brief refresher of what the logic is going to be. The logic is fairly simple. We are working to find the opportunities in with the trend manner. So if the momentum is bearish, we will be looking to sell. If the momentum is bullish, we will be looking to buy. And as this session is going to be dedicated to getting the buy side of the equation done, we will have to look for the opportunities where we have the momentum on the bullish side, and for that we are going to rely on the time segmented volume output. If it is above 0, that will be indicative of the fact that momentum is more favorable to the bulls. If the output is below 0, then that is indicative of the bearish sentiments prevalent in the underlying instrument. So here, for last couple of days, we have the momentum in the Euro USD favoring the bears. We have this continuous decline happening, and today we are seeing some respite in the selling pressure, but those gains have evaporated. We had this early rise, and now again the Euro USD moving on the lower side. So now coming back to the situation where the bulls were in charge, where the momentum was bullish, we will look to get for the go for the buy trades when we have these TVS output value above 0. So for that, we have to go back in time to 8 June, where we had this TVS output above 0, and not only it should be above 0, it needs to be on the rise as well. So the volume should be rising along with being in the positive territory. So that is going to be the requirement for the TVS. And then we turn our focus to the acceleration deceleration oscillator. It should be in the correction territory. It should have corrected somewhat from the higher levels. So we will need the AC block to be in the negative territory. The output value of the acceleration deceleration oscillator will need to be below 0, but it should start to rise. So for last hourly output of the acceleration deceleration oscillator, it should be greater than the prior hours acceleration deceleration output. But compared to the hourly candle which had closed 3 hours back, it should be on the lower side. So only in the last hour the momentum is now turning on the bullish side, and this is the time to get involved for the new trade, to go for a long trade. And along with that, we will also need the last hour's candle close to be greater than the opening price, so that will indicate the momentum was sustained in the last 1 hour. So we are going to use these three key criterions while deciding to go for a trade. Okay, so now we have to implement this logic on the Visual JForex board. So I'm getting back here, and we have to start adding the if-else blocks for defining the parameters. First thing first is to get the multiple action blocks in place. For the time being, I will join it here. If later on we have to add any calculation or indicator blocks, we will leave some space. Okay. We take this first flow and join it to the block. Then we consider the positive and the negative output of the acceleration deceleration oscillator. All these three values of the AC will need to be in the negative territory. So I need negative 12, negative 17 and negative 18 to be less than 0. So for that we are going to need three of these if blocks. Alright. And second input is going to be common 0. Here also 0. 0. Alright. First input less than second input. First input again less than second input, and the same case will have to be followed there also. So first input again less than second input. Then in the last hour it should have started to rise. So we will need the negative 12 to be greater than negative 17. So first input greater than second input, whereas the second last hourly candle's output value of the acceleration deceleration oscillator, it should have been less than the third last hourly candle. So we need negative 17 to have been less than negative 18. So here it is going to be first input less than second input. I will arrange these blocks on the lower side here. Now coming to the second important parameter, which is going to be the time segmented volume. We need to have it in the positive side. So both these output values, the TVS 13 and TVS 19, will need to be greater than 0. So for that, I'm going to add two of these if blocks. Second parameter is going to be 0. First input greater than second input. After that, we bring in another couple of if blocks. So here it will be first input greater than second input, and not only it should be above 0, it should be on the rise. So we need last hour's time segmented volume output to be greater than the prior hour's time segmented volume output. So TVS 13 will need to be greater than TVS 19. First input again needs to be greater than second input. Alright, then the last hour's candle close will have to be greater than the opening price. So we have to compare the candle 20's closing and opening price. Candle 20, candle close, and candle 10, 20 candle open. Alright. So here the first input needs to be greater. So we have defined most of the parameters involving the acceleration, deceleration oscillator and time segmented volume indicator. Now we have to define the exact entry point when the trade execution will take place. For that, we are going to rely on the last hour's closing value. As soon as the price starts to rise above last hour's closing value, the trade execution should happen. So for that, we have to compare the closing values of the 10-second historical candles with the last hour's closing value. So we have to compare the closing values of candle 21st and candle 22nd with the closing value of candle 20. So candle 20 is going to be the common input parameter here. All right. And then we take the candle 21st and candle 22nd closing values. The candle 21st should have closed on the higher side. So here, first input greater than second input, whereas candle 22nd, which is the second last 10-second candle, it should have closed on the lower side. So we will need the first input to be lower than the second input, and after that we get in the trade command block, which is going to be open at market, whatever is the current market price. The order execution will happen then and there. First input less than second input. Coming to defining of the input parameters for this trade command block, we leave the default instrument as it is. Trade amount I will change to 0.1 million. It should be kept as per the equity in the account. If you have high equity, then higher lot size is desirable. If you have low equity, then of course the lot size should be kept low. Slippage for Euro USD, even 5 pips or for that matter even 2 pips is going to be good enough. And since we generally have a hourly ATR of 15 to 20 pips for the Euro USD, I think a combination of 20 pips to 30 pips should be good enough. So I'm going to take stop loss of 20 pips and take profit of 30 pips. So with this, we have defined the stop loss and target price in the risk reward ratio of 2 is to 3. And as I see, the buy side of the equation is complete. So I will get these blocks arranged on the lower side. So we get more aesthetic formation in place. All right. So with this, the buy side of the algorithm involving the acceleration, deceleration oscillator and TVS is complete. I hope you have been able to understand the logical as well as the execution part of this algorithm. So thank you all for joining in. For further coverage of the market developments, do check out the Dukascopy Analytics page. We are also available on the Facebook. You can reach out to us there. For carrying out the testing on the historical data, you will need the assistance of the JForex platform. All these useful links have been provided in the bio. Thank you all for joining in. See you next time around. Till then.